What's up, everybody? This is Jimmy with Trading Decoded. It is June 13th, 2024, 4:02 in the afternoon. The market is closed. Today provided us a very nice downtrend this morning that most of us were able to get in, get our money, and then walk away from the market. After that, we kind of bottomed out and then slowly churned our way back up, in which case we wanted to wait for a couple of major levels of resistance to break before we were considering taking calls. We got those levels broken, and then there were some call opportunities. But like I said, most of us are trying to get in and out of the market long before the end of the day, because unless this is your day job, I can't see. Well, I guess if it was your day job, you'd want to be done as soon as possible, I would imagine. But hey, to each their own. Also, before we get the video started, I just want to let my members in my community know I will be opening up the annual discount. Yes, it's 2 weeks early, but that's because I have people who are going to have a lapse in membership time between now and the end of the month. So I'll put that code in our community for those of you who are interested in joining the annual membership, which, So without further ado, let's go ahead and get into the charts and see what we saw and see why we took what we took, if we were taking them. Pre-market range was pretty okay. I mean, 542.64 to 543.90. I didn't really know what to expect today. I wasn't expecting up or down. We just needed to wait for the right reason to take whatever it was that we were going to take. And, we had the reports this morning, which pushed us up to our pre-market high area and then came right back down to our pre-market low support. And what I think we're going to start seeing in the market, we all know that the market is expecting rate cuts sooner than the Fed is saying that they're going to give them. And I think that the market may start once again, maybe not right away, but soon, interpreting bad news as bad news again. Because I don't know if you guys are paying attention, but it seems like for a long time now, bad news has been good for the market and good news has been bad for the market, right? So I think we might come back into normality in that respect soon. And the reason I believe that is because I think that the market is now afraid, or soon to be afraid, of the fact that the Fed has now waited too long to cut rates. And they think that, or they being the market, they think that the damage will already have been done. And the market will have to start saying, bad news is bad, because that means it's too late and the Fed dropped the 8 ball, however you want to believe it. I don't think Fed should be cutting rates ever, let alone anytime soon, because money should not be free. But with that said, let's get into the chart and what it is. But just keep an eye on that, because we might start to see things going back to normal as far as good news, bad news, reports-wise goes. Because the reports came in great, meaning CPI was lower than expected, which is good, right, for inflation. But the market, yes, moved up and then immediately came down and then started to sell off. So it wasn't great as ways the market reacted, or as you would normally think it would. So leading into the open, we were stuck in between our pre-market mid and our pre-market low line. I was interested and ready to play calls while we were opening up near this line. Our call line was a breach of 543.25, and our put scenario was a breach of 542.64. What were we expecting if we got into calls? Well, to make it to pre-market high. If we took the puts, what were we expecting? We were expecting or hoping to get down to support right here. Okay, this was old resistance turned support. We were hoping to get down to 542.20. Now, at the open, we got a nice big red candle. ADD at the time, if I'm not mistaken, was not yet dropping. So ADD at the time was pushing up. That made things a little weird. But Q's big red candle at the open. So we thought, hey, let's see if we can't jump into these puts, because we did cross the put line at the time. Q's were at resistance. Now, as we were moving down here on SPY, it wasn't happening at a rapid pace, and the Q's had started to move up and started to break resistance. Now, because at this point, ADD had already started to sell off, it was stopping SPY from running aggressively to the upside, which is what saved this move in the trade that it ended up being. Now, as we were in this trade and it wasn't going down, not only was it not going down at the pace we hoped it would, Qs had reversed and started to go up. I told everybody at that time, guys, Qs look like they're trying to go in the opposite direction. I don't like to trade against the Qs. Please put your stops in at break even or in profit, because by the time we got down here, everybody in that trade, as long as you didn't wait to get into the trade, the breach of the line means as soon as we cross that, we're getting in. You had the opportunity to get in and get out with a 10 to 12% return. Now, that's not a great return. We normally were aiming for more. We were hoping to get a little bit lower than that, which would have yielded us another 5%, maybe 15 or maybe 10%. But nonetheless, we protected ourselves with a stop loss in the event that the Qs took over and pulled SPY in the other direction, which is exactly what happened. Now, when we got back up here, okay, you're looking at this saying, Jimmy, why entry here? Why entry here? Number one, we were once again breaching the put line. We were also coming off of a lower high in relation to this one here. Now, what was happening on the Qs at 942? This is important. At 942, the Qs were making an aggressive move to the downside. ADD at 942 was well into its sell-off at this point and continued to do exactly that. So ADD became a gauge as to whether we should be aggressive on our moves or not aggressive. Okay, so when you have ADD selling off massively like this, it's telling you that the rest of the market is taking profits or selling off or whatever you want to call it. Plus, the Qs had just made a decent move to the downside. So once again, we were looking to enter here. Now, the reason that there's a take profit circle here is because we had found support here before on Qs. So again, if you got in here, another 10 to 15% return. If you waited until we got to the original target we were hoping for, you got a 25% return. Okay? So 25 to 29, depending on when you got in. Either way, profitable trades, coming off a lower high. That usually means support is likely to fail, not hold. So for aggressive traders, that's a decent entry. That's where we're looking to go. And we had ADD on our side. We pull back. Now, it's at this time that we are able to draw a nice trend line because we're putting in lower highs. You got a high here, a lower high here, a lower high here, lower high here, here, all the way down. Okay, followed by lower lows. So clearly a downtrend. You have ADD telling you it's pretty good reason to be considering puts. And then obviously at the time we had Qs also trending down, lower highs, lower lows. Now Qs were acting a little funky until they finally decided to break the support down here, which opened up the floodgates and let SPY continue to drop. Now, I'll tell you this because I know some people do it, including myself. The best time to buy puts, is during a downtrend at a pullback to resistance. I don't care if that resistance is a trend line or if it's a line of support and resistance. The reason we want to wait for that pullback is because not only are you waiting to get in at a more opportune time, you are also reducing the size required for a reasonable stop loss. Okay, so if you would buy puts here, your stop loss is a candle close above that line. If you buy puts here, your stop loss should be, we're not close to resistance. So you would have to wait for at least this lower high here as a stop loss. But again, have a line in the sand that's close enough to your entry point that if you cross it, you should get out of the trade with minimal damage. Now I'm going to show you what I did on my second trade of the day that didn't do so well for exactly the reasons I just explained. Now it was a winning trade, but it was only winning because I endured a pullback that was uncomfortable but made sense to me. The reason you buy pullbacks and not breaks of support, okay? At this point, I'm okay with playing a break of support so long as Qs are not sitting on support. So at 10:04, we had just gotten a big gap down candle, if I'm not mistaken. Yeah, this gap down here, I got all excited, said, guys, that's a pretty takes aggressive selling to make a gap like that happen on the Qs. And then this thing, and we're coming off lower highs. I'm expecting this support to fail, not hold. It ultimately failed, but not before it held first. So I bought puts while Qs were sitting on a support. SPY had just broken support, and it pulled back. That's why this arrow is here. Just let people know, so I have a reminder to explain to people why you should wait for the pullbacks. Because now that I entered here, my stop loss was a candle close above these resistances here, this lower high, okay, which happened to coincide very closely with the trend line. This was uncomfortable. Had I just bought here when a whole bunch of other much smarter people and much more level-headed folks bought, they never even saw red. They got into that trade and we went right down to all the places we thought we were going to go. Now, our target here was hoping the Qs was going to get down to a line of support, which they ultimately did at 1023, which was right here. I'm sorry, no, this was the last line I had on the Qs chart. So that's why we were aiming for that line. Again, guys, you had ADD selling off. You had Qs now selling off. There was no reason to get out of these trades if you were getting into these puts, because momentum across the market was on your side. Now, the reason I took and many others took profit here is because I hadn't yet drawn any more lines to the downside to act as targets. Plus, at that point, this was a banger of a trade, very, very nice return. And you either got in at the best time or you got in at an aggressive time and held through some uncomfortable times to get down to where we were trying to go. Okay. With that, the Qs did break that support. We ended up making it all the way down here. And then, of course, we're aiming for the pink line because the pink line is the stink line. Then we turn into a wedge. Now, you might see a new symbol here. This is a red X. Now, what does that red X indicate? Well, oh, by the way, down here, for the people who got in at the pullback, both Qs and SPY pulling back to resistance, your target now becomes the low of day that we were just bouncing off of, okay? So this is why this here. Now, the red X is here. Why is it here? Because many people were looking to buy puts again, which is completely fine. We were coming up to the trend line. Now, this trade ultimately ended up working, but I was telling people why I wouldn't buy puts here this time. Now, what was happening at 1037 on the Qs is they were coming off of a higher low. Okay, at 1027, Qs were coming off of a higher low. And I said, guys, I wouldn't buy puts when we get to this resistance because I expect it to break and move up. I don't know how far it's going to go up. I don't know how long the move up is going to last. Definitely not buy calls here, but I wouldn't do it because higher low, right? Then we put in a higher low here. And every time we put in higher lows on the Qs, it did make a higher high. However, ADD going in the opposite direction was keeping SPY from doing the same thing. So SPY, I wouldn't buy here. It ended up holding resistance and we did come back down to the same support. So for those of you who took this trade because you took your own trade, good for you. I'm glad it worked. I just wanted to explain and have a reason to show people why I wouldn't do something, even though I don't know if it's going to work or not. Okay. So that's why that X is there. Then we turned into a wedge. Now at this point, somebody was asking me, Jimmy, do wedges usually break higher or usually break low? I said, well, they don't usually break in any one direction or the other. Now we are trending down, so I would expect it to break low so long as resistance holds. But what's important is if and when it breaks high or low, is the move going to be leaving you potential room? Okay. So we were having this conversation while this green candle was printing. I said to this person, if we broke this wedge high, where are you expecting it to go? Well, now, if you just look left, that yellow line is where you should expect resistance. Is there enough room between this red line and that yellow line to make any money? Of course there's not. So I wouldn't have taken that trade, period. Even if we got above this yellow line, your next line of resistance is just 14 cents away. Okay? Not worth it. And then if you got above that line, your next one's too close too. So calls were off the table. Number one, because of the counter trend trade. Number two, there was just no room for potential movement to make the risk even justifiable. To the downside, I said, okay, well, if we breach the downside wedge, where are we expecting it to go? Right down here to 540.51. We broke and breached that line, and guess where it went? Right down to 540.51. Okay, so potential for room that gave us the room. It went right to where we expected it to go. That's what you should be looking for in a wedge play. Okay, we come back up. We're still respecting the trend line. We're thinking about taking puts here. Why? Because Qs, once again, if I'm not mistaken, were hitting a level of resistance. Yes, they were hitting a level, pulling back to resistance here off of lower highs. We're expecting the support to fail, and it does on the Qs, and it does on SPY, and we get down to our pink line at that point. After this, we broke the downtrend. Now we're in a holding pattern, okay? This red line had been breached, hadn't been done so since we put it there with the candle close. Guys, we got to wait for a setup. I don't know that I would play puts yet because I want to see everything that we were taking puts on was now breached, over, done. Doesn't mean it can't leg up and then come back down lower. It did that later. But you've got to wait, okay? Are we going to start putting in higher lows? Are we going to start putting in higher highs? How far back are we going to go? These are all questions we'll not know the answer to, but you want to see confluence after a move like that, at least telling you, hey, it's safe to get in now. So we didn't do much of anything. We found a really, really strong level of resistance here, okay, which is that congestion we were talking about on the wedge play. If we got through this wedge to the upside, you were going to run into this problem, okay? Don't know if it's going to break high or if it's going to break low. Just wait for confirmation. At this point, I was getting ready to go to lunch, and so SPY started to do SPY things after lunch. Now, right before I left for lunch, I told everybody, guys, I wouldn't touch calls. I wouldn't touch calls until the Qs at least get above 476.65. And the reason for that is because they'd be out of this congested area, getting above a strong level of resistance with the opportunity for and potential to go up to its 477.06 line. Okay. Now that happens after we get back from lunch over here. Didn't hold above. You always got to look left. What is above that line that should be holding us down as resistance? Well, it's right here, this area here, and then you had one here. So you got to be careful. But we are putting in higher lows, higher highs, not a very aggressive move to the upside. This is a very difficult trade to take because the level of the move on Qs was not very meaningful. On SPY, once we got above that level of resistance, very same area, we held above it and stayed above it. And then ADD started to move up with a little bit more excitement than the Qs were. So again, late day trades are not my thing. We needed to break resistance on SPY and on the Qs. Once it happened, we started to move up, but not at a pace that would have made me very comfortable. And then we got back right into our pre-market range again, where we stayed. We never got back above the call line scenario, and we closed kind of near where we opened, which is always fun. And that's pretty much it, guys. So I hope you found some useful information in this video. If you did, please like, share, and subscribe. If you'd like to join our Discord community, where there's a link down below, we'd love to have you. And I hope you all had a fantastic day today. Tomorrow's Friday. It's always a good day. And we're going to wrap it up. So thank you guys for watching. Till tomorrow, I love you guys. See ya!